Hey everyone, sorry for the late start. As soon as we get 50 live, we'll crank it up. We're almost there. Welcome everyone to the Kendall Report. It is Thursday night, final broadcast for this week and also for the month. This is the end of the month closing. So before we get too deep, remember to subscribe and like these videos. So plenty to talk about. The Bank of Japan had their meeting, and I want to start with that tonight. That's, for me, the lead story. A couple things happened yesterday. They decided to basically keep rates below 0.25 or 0 when everybody else is raising. So it's absolutely killing the yen. And it's almost like this kamikaze kind of strategy. I don't know what they're thinking right now, but things are getting pretty crazy over there. And I talked in detail on Tuesday night about the potential impact of a continuing decline in the yen. Japan's not a small country, right? It is, they're big time in manufacturing, and they have to basically import a lot of stuff that they need, oil and lots of other materials. They don't really have mining and those kind of things on a large scale. So they're dependent on the rest of the world. And everything's still priced in dollars, and their currency's declining, so it's costing them more. Not sure what they're thinking. It's just it's an interesting policy. They've been stuck in their QE for what, 3 decades now, the better part of that. So there's just no way to get out of where they are, I guess, once you've done that so long. And maybe, and I talked about this on Tuesday night, maybe this is the straw that breaks the camel back, that it's kind of out there. A lot of people are starting to talk about what's going on there, but it's definitely getting serious. I'll show you tonight. I'll cover the yen a bit as we finish the end of this month. And I think it's going to be a thing. So I'll go through that more when I bring up the yen chart here shortly. So yesterday, crazy day, right? I mean, this crazy bid that got in the market. S&P up 2.5, Nasdaq up 3.1. It was up over 4 at one stage, and Russell up 1.8. Right now, Nasdaq is down 1%. It was down about 1.5%. It's recovering a little bit, mainly because of the Apple report, right? So Apple was down at one stage 4%. I haven't looked at it lately, but I'm sure it's still underwater. So a lot of folks got real convinced yesterday. It was basically a FANG rally. Started with Facebook. Facebook was up over 17%. If you watch Facebook trade, that was exactly how the markets were trading. It was just a giant stampede. And there's no way to deny it. This is the end of the month, and this has not been a good month. The close is, if you recall, we had this big reversal and closed up higher, and now we've reversed that, and I'll show you here in a minute because we're going to go through some long-term charts. We're going to talk about that quarterly setup that I've been talking about for a while. So that's going to be continuing the dialogue, and this is just about to come into May. So we got May and June yet, 2 more months. This is the first month of the new quarter. Not really a great way to start. I know it feels like, everything's okay now because we had this big rally today, but the rally was relentless. It was very focused, and although all 11 sectors were up yesterday, so basically everything was getting bought up and gobbled up. And was that a low? I think probably not. I think what the scenario that I talked about last night, that we get maybe 3 days up and then we hit some resistance. Well, the resistance is going to be upon us today. You'll see here in a few minutes when I go through the S&P. But just looking at some of the economics that came out yesterday, I don't know that anybody was looking at that, right? GDP, for example, was expected to come out plus 1.1, and it came in minus 1.4, and it was just shrugged off like, oh, well, doesn't matter. We're buying Facebook, we're buying Amazon, we're buying Apple, we're buying. And that was the whole focus. Claims came in a little better, 180. These employment numbers are insanely good from the standpoint of historic lows. Continuing claims came in at 1.408, another downtick there. So it just continues to see this really tight labor market. But ultimately, this is going to raise another concern for inflation, right? It'll be wage inflation is going to have to come up. We have just tomorrow, we've got the PCI numbers coming out. So we have personal income expected to be up 0.4, personal spending up 0.6. I'm not sure how that works. And then we've got the PCE prices. I've seen numbers as high at consensus numbers around 0.9 up on the PCE. And this is supposedly the Fed's favorite measure. And I know the dialogue out there is that we're at peak inflation and all that stuff. I'm not so sure of that. And as you'll see when we go through the technicals tonight, we dig into the end of the month and start to extrapolate out what's likely to happen here in the next, by coming into the end of the quarter, and what that all means. There's some big answers to questions coming up here in the next 8 weeks. And these are major questions about markets going forward and also about the economy. And it's interesting, when I was looking at all the numbers today after looking at the economic numbers and looking at this minus 1.4 GDP, I was, this first quarter, I was talking about the market, not the markets, but the economy hitting a wall, and that's what's happening. It's weird though, because we're getting this employment still looking better on most of the metrics, but in the end, it doesn't feel better, and it's going to get more interesting because at some stage here, we're at a critical stage where just about everybody that can work will work, that will work is working, right? So that's going to be where we're heading at. So continue to watch, and I think this is just to kind of wrap up this segment. I think the things to watch going forward are, I'm not going to go through a lot of details tonight, but looking at the supply chain and disruptions of the lockdown in China, all of a sudden that didn't matter. A whole bunch of stuff didn't matter today. When these stampedes happen, if you get in their way, you get hurt, and they just are relentless. I mean, I counted on a 5-minute chart, there were, I believe, 22 bars in sequence that every bar closed higher today. There was a 40-handle rally after the initial sell-off early in the morning and overnight, because we printed up pretty good, about 1.7%, and we came back down, printed back under 4,200, and then it was just a buying craze all the way up to 43, above 43. So we watched a 100-point intraday rally on the S&P, and the liquidity was, forget it. There was no liquidity. It was terrible, terrible day. So it was going up on air, but it was also there's no other way to describe it other than a stampede. Look at a couple of my other notes here. There's some things that I'll also talk about tonight. We did actually, and I'll go through all the details here in a minute, we did get an RTXL signal on S&P cash. So, and we are seeing some weakness overnight. So let's go ahead and dig in to the database and get into the presentation for tonight. So as we look at the database, it's at 15.33% bullish, 312 buys, 177 sells, basically a 3-to-2 ratio, but it's so minor. We're looking at a database of 16,224 symbols, and that's not a lot. Not a lot of buying or selling. It's basically looking at this very low level rotation, and it's not material to say the least. And just to come up on screen here for a minute, this will be Friday. We run our intermediate models. No expectation at all for any traction there. Maybe it'll surprise me, but I don't see, when I go through a lot of the patterns, even looking at like the Apples and Facebooks and all of those, yeah, they had a big rally today, but those charts just look terrible. There's nothing good about any of these patterns. And if you're stabbing at the lows, and maybe you get lucky, but I always teach, as those of you that are in our live room, you got to have structure around the bottom. You just don't want to buy the spike lows. Sometimes you get lucky, and other times it goes up for 2 or 3 days. Next thing you know, you're making new lows. So you need structure in these patterns, and that's why with my PPMs and all of that stuff, it helps to give you some signals. And right now, there's no signals about doing anything that looks like buying. And if you got lucky and got long and made some money today, good for you. But it doesn't appear to be sustainable. And if that ends up to be the print low, and I'm going to talk about something tonight, because there's major support basically at this week's low is coming in play. And I'll go through all the details here in a minute. But as we come at just a final comment on the intermediate database, I just don't see any traction happening. Until that happens, it's going to be very difficult to get any kind of sustainable rally. We can get these bounces, 200, 300, 400 points. We're in this huge volatility range. Like I said, we watched in a probably 3-hour, maybe as many as 4. We watched a 100-point rally in the S&P. So, so what is it to go up 300 or 400 points when it can move 100 points intraday? So we're back in this spike volatility. We're back into lack of liquidity. And I tell everybody that's in the live room, that liquidity is not how many traded, but how the bid ask are stacked and what type of volatility you get in, especially in the futures. You can see that. And we had amazing liquidity for the last 2 months, actually. For overall, I'd say 85+% of the time we had amazing liquidity. All of a sudden, boom, we come into this week and there's no liquidity whatsoever. So let's start off with going through the normal short-term analysis just to get that out of the way, and then we'll dig into the longer. I'm going to spend a fair amount of time talking about the longer-term patterns that are out there, but for the most part, it's not going to be a very, very good story here. So let's take a look here. This is the cash. And as I mentioned, we got an RTX sell signal. RTX yesterday was 42.77. We went out at 42.87. So that usually should suggest that we should come back in. 42.63, S1, S2, 42.37, something like that. 43.11 is R1. And what you'll see here is 43.31 is the 10-period moving average, and it is dropping roughly 15 handles a day. That's going to put us almost exactly at R1. In the futures, it is exactly R1. So let's go over and take a look at the futures. Futures are off 0.37. They did come in. They traded all the way down to 42.35.50. So we've rallied 30 handles so far off of the lows just tonight. We look at the ranges for today. We've satisfied S1 42.54. S2 was 21. So we traded between S1 and S2 overnight. R1 42.13. Look at the 10-period moving average, 43.15. So basically an R1 hits the 10-period moving average. Now the 10-period moving average has crossed through its second derivative, but we're still down minus 0.28, which suggests there's about a 60% probability we won't close above 43.13. If we do, then that will be positive. The next level is 43.46, but you can see this monster range being projected by the kick up in volatility here. So volatility is going to stay high. So R2, I don't think we'll see S2, but could see R2, S2. I'm expanding the ranges right now. Typically we'll see like an S1, R2. That could be the scenario. So you just have to use these numbers up here as a pivot as we come into tomorrow. So let's take a look at a couple things here. Let's start off with the cash, and we're going to go to a monthly chart. So we're going to do some long-term analysis on the S&P. Like I said, we look at last month, and we closed near the highs. We actually closed back above the 10-period moving average. This time, we're about to close well under the 10, and the number that I was mentioning just a few minutes ago, 41.22, is the 21-period moving average. PPM1 is 1.19, and that is going to be major support. The low so far this week, 41.62. This is the cash S&P, not the futures. And that's going to be major support. So what we could do, at least early on in April, is trade between the 21 and the 10, which is 41.22, 44.87. And even if we break through 41.22 early in May, we're probably still going to bounce. I don't see that being a trigger point, not with this rate of change that we have right now, the percent change, 1.19. Although we have crossed for second derivatives on PPM1, PPM2, PPM3 is through its first derivative, not through the second. So, but there's still an angle of attack here, which is likely to carry this forward for another month. So let's go over and take a look at something more substantial here. And I've got a couple things here. I've got our trading view indicators up here. I've got the pattern finder that's up here right now. And this is a quarterly graph. And I've been talking about this a while, but I want you to see how the PPMs are rolling over. They're still very positive, but the value at the for the moving average right now, the 10-quarter moving average is 38.96. So that is your extreme. No matter what happens, we're probably at 38.96 is initially the low, even if the chart was to break down. I don't think, like I said, looks like to me the month of May will probably be stuck between there. When we get the update for the month, which will happen this weekend. Once we get that new update, we won't get a new update, I believe, until Monday, and that will be a very interesting numbers to look at, both from market grid viewpoint on the expected ranges, but even on the quarterly. I don't have the market grid up there right now, but it's interesting to if I do put it up there. Let's turn that on really quick here, and we're looking at right now the ranges expectation is the extreme. This is for the quarter, right? So this suggests we've already printed through. Let me get this number just right here. It's kind of sensitive here. Yeah, so we've actually are printing through the STX number 4382. So it's interesting that from a market grid standpoint, on a quarterly, we're already seeing we're potentially going to get an STX buy signal, but we're a long ways away. We still have May and June to go through before we get that answer. I'm going to flip this over to a monthly chart real quick and see if I can get this scaling to be a little more legit here. But what I've got this counted as, this is the fifth wave, and I won't go through the intricate Elliott part of this, but this is clearly, let me draw something in here just so I make sure that you folks are seeing exactly where I'm talking here. So I'll just draw this in that this was most likely 1, 2. This is going to be wave 3, and ABC, which is called an irregular top, like a bugle formation here, if I draw that out, and then this wedge breaking out to the upside. And now this is wave 5 of grand supercycle stage. So the potential is, if I break down this next section, there's a potential because of this rising 21 that I talked about on the other chart just a minute ago. Because of this rising 21 right here, there is a potential that this is a minor 4 and there's actually one more high, and then you get this. And this actually probably comes back to this level or back to wave 4 previous degree, which puts us back at 2,500 or something like that. So there's a lot of work to be done. These are monthly chart that we're looking at here, and just a lot of things that could happen, obviously. But this 21, let me erase some of this stuff. The 21 period moving average, which is the cyan line right here, coming up to this, that's that number that I just talked about that will be just above the 4,100 level. So that's going to be major support as we come into May. So I don't see the breakdown happening in May. We'll probably see some more stabilization from that standpoint, and we should hold those lows. And I think this low that we put in this week might end up to be a fairly significant low. So we'll just have to watch and see how the pattern set up over the next week or so. But that 21-month moving average setting right there is going to be huge. And that's why the metrics that come out on when the update happens for the monthly, so once this month is closed and we start the first day of the next month, we'll have, as soon as we get a first print for the month, we'll get some new calculations and we'll start to figure out what's likely to happen here from the standpoint of this continuing trend. Like I said, that 40, I'm just rounding off, we'll call it 4,100, 44 and a half, 44.50, probably going to be the range we're going to be in for May. And the old sell in May, go away, folks. Maybe that'll work out. We'll find out. But we're going to come into the most critical month, which will be June, which will be the end. Once we get into June and the end of June, this is where I was talking about earlier, where I believe we're going to have we're going to have some major answers to some questions about the trajectory and what's likely to happen in the market. So whether we see a move down to the quarterly 10, which is 38.90, or what happens there, that's all going to be told at the end of the quarter. So if we close lower at the end of June on a quarterly bar, then the probabilities go up substantially to have anywhere from 4 to 6 quarters lower. And all of a sudden, all of these metrics and things that I just talked about will start to roll over. PPMs will start to cut through first, second derivatives, and we'll start to see probabilities rise substantially to a bigger decline. If that doesn't happen and we hold these numbers, then what we get is the sideways range. And if you remember going back to the 1st of February, I think it was the first new video of February, I was talking about I thought we'd spend at least 3 months in this range. We did expand the range down to 4,100. If you remember, the 42.12 was the low, and I thought 42.12, 48.12, so far the highs have held no problem. We did expand the low, but we've been down there twice and we rebound out of here really sharply. So, literally in the last couple of days, we went from a mid 4,100 all the way back to 4,300 and trading in mid 4,200s right now. So understand that these are big numbers that are happening. The action that we're seeing here is significant. The only thing that I see that I will cover in the Nasdaq here next, because I want to do at the end of the month, I know this is going to be a little longer video than I'd like them to be. It would be nice to go back to the 15-minute videos, but I don't get a chance to do this. I can come in here and prep for half hour, 40 minutes and do one of these videos and be able to put a lot of information out. So I know it's somewhat tedious and I get comments all the time, your videos are too long. Well, this is about doing a full analysis of what's going on. So this scenario that I'm talking about here is going to ultimately, between now and the end of June, we're going to be determining exactly the trajectory for the next 4, maybe 6 quarters. And it's going to be, for me, this is everything from the standpoint of the type of things to do. We have a lot of institutional clients. Like what do I tell those folks, how should they be positioned? Where should they be doing right now? We've just got a fair amount of cash hanging around, which is okay right now, even with these big bounces. That if you notice, a lot of the ups and downs happen, big up, big down are congregated together. So you get, big 2.5% drop, and then you get a 2.5% gain, and they're within 2 days of each other. So it's really just kind of a back and forth affair. But these numbers down here at 4,100 are significant from the standpoint that we have come down to that 21 period moving average. A couple months ago when I was talking about that, number was down at 4,000. So it's jumping big numbers. So 2 months later, here we are at 41 and change. So I think I've made my point. Let's go ahead and take a look at the Nasdaq. So this is what I was alluding to just a minute ago, was what's going on with the Nasdaq. Now, Nasdaq, the 21 period moving average meant absolutely nothing. It's still up 0.85, and the market continues to trade under it. We would have to close up tomorrow above 13,870. Guess that's possible, right? But we'd have to close above that to get back above that 21 period moving average. And this is the monthly chart on the Nasdaq futures. And you can see the PPMs are, PPM 1 is minus 0.81, while PPM 2 is a plus 0.85. And what that sets up the scenario, just like with the S&P, that we end up trading to somewhere around the lows. Last month was 12,942. The lows this month was 12,801. So we're printing down in that 12,8, 12,9 level, and that may end up to be the low. And then the absolute extreme on the upside, we're going to have to get above 13,870, and above that 15,000 is the monthly 10 period, and that could set the range. So once again, still looks like possibly range bound, but there's a big but here. The fact that we're going to close looks like substantially underneath the 21 period moving average at 13,870. And now this is a live chart, so S&P or Nasdaq's down 144 handles, down 1% right now. So we were up 4, closed up 3. Now we're down 1. So basically yesterday was a 2% day, which is still impressive. But a lot of the push has come out of this. And I know somebody was saying that, Apple had a great report. The problem is what's going forward. It's the forward looking, not the rear view mirror, that is affecting the earnings here and the expectations. So, you can talk about what they did yesterday, but they're not talking a good game when we're talking about going forward here. So this is going to be a big element here. I know yesterday was a FANG rally. It probably felt like the good old days. Not sure that's going to happen, going to continue here. But as I said, the lower bounds that we printed last month, that 12.8, 12.9, those are going to be important numbers to watch. And then on the upside, 13.8, and then again at 15. So just setting up expectations as we come into the next month. Let's go down and come back to the daily chart here. And you'll see daily yesterday, we rallied right up to STX 13,517, high 13,542. So we printed above it. 13,554, we actually got an RTX sell on the Nasdaq as well. So it makes sense that we're down. We should have at least a couple of days of sideways here, and the PPMs are trying to turn up. So that's good. Even with the market being down 1%, we're seeing PPM 1 start to move up a little bit here. So the PPMs are kind of overdone. We have what I call a bubble bottom here on the Nasdaq. So ultimately, maybe you trade back to the the 21 and 40, which are down, up at 14,032, 14,74. You know, I love clustered numbers, so this is probably a potential for a rebound. And today is going to be fairly interesting. Today, meaning Friday, is that maybe we get an inside trading day. And typically after a big reversal, we get an inside trading day. The next day will follow through. So we'll just have to watch the PPMs that come into Sunday night. Let's go to the weekly, just for a quick view. We've now got 4 weeks down, so we're possibly could be one more week of a lower price range and then a reversal. Typically, we'll get these. We actually had a very complex move off of the highs, a 3-bar rebound, and now we've got 4 down, so there's a possibility of one more week down. And like I said, the Nasdaq pattern, the fact that we're closing under that 21, does suggest there's a little bit more risk than it looks like, but I think the scenario that I just painted is going to be the best one to operate off of, especially if you did print down 12.8, 12.9, you would want to be looking at your favorite stocks in that spectrum as far as the Nasdaq goes. All right, so Russell, this is a weekly Russell. It's trying to flatten out. We're continuing to trade just above the 200-week moving average right now at 1916. Let me get the number right. 200-day is at 1841. I'm sorry, I got the wrong number here. 1771. Let me try that again. 200-week moving average, 1841. That's your key level. And we look at the range, 1864 was S3. If you look at the chart here weekly, 1864.87, the low 1864.42, almost an exact hit on that S3 number. So we definitely got a bit of a bounce there, right? So if you'd have been playing into that number on a weekly market grid, that would have been the place you'd have been looking to buy off of that S3. Extreme was STX 1841. We never got close to that. We printed the perfect S3 there. Let's go over to daily. I'm not sure there's much here to look at, but we did get an upturn. We did have some targets down here that were 1898 was the low target 1, which is a fib target 1. 1836 was fib target 2. So we traded between fib 1 and fib 2 here on the downside, and that we got a bounce out of there. A little bit of a bubble bottom. Resistance is going to be up at 1960 or so. So the whole scenario, the way I see things setting up, is that we're seeing these markets probably hit an extreme in the last couple of days. The rally that we saw today may stall. There's going to be some month-end stuff that possibly come in. We'll see what happens on Friday. But the scenario is that we probably are printing, especially with the S&P, that is probably the market to look at for the support. And like I said, we're this week's low is exactly where we need, I guess, where the extreme where we were right at that 21-month moving average. So we'll take a look at the daily 10-year. Still have that lurking targets up above here at 3.13. We'll just talk about the minimum target. We're right back above the 10-period moving average. PPM's turning up 0.62, 0.82, 1.03. So the upward motion or the angle of attack on the 10-year on a daily basis is still very positive. We traded up right to the RTX number, 2.89. We printed 2.88. So right into that level, 2.877 was R3. So we printed an R3 on the Treasuries. Let's go over and look at the weeklies. I think this is where we set up here. This is most likely setting up a very broad range. I've talked about this in the last couple of weeks, but around 3.02 would be an extreme here, R2. But we'll get this update on the weekend. Those of you that have the market grid on TradingView, you'll have that number as soon as we close out on Friday. Actually, as soon as it opens on Monday, you'll have that number. You have to have an opening price to get the calcs. But that pattern is likely to stay somewhat stable. If you look at the last 3-4 bars, the closes have been pretty much in the same range. You had a close 3 weeks ago at 2.82, then a close at 2.90, and we'll see what tomorrow is. Right now, 2.86, so we're just flat here. So I expect the market grid to stay in this, what I call it, when it squares off. So typically when it squares off, you'll get 3 or 4 bars in there, and then it will take off to the upside, probably potentially to 3.02, maybe something higher. We'll see what the numbers look like when they come out on Monday. Take a real quick at the view at the yield curve. Yield curve flattened a little bit, but nothing substantial here. You can see we're trying to set in a bottom here on the yield curve, and maybe let me draw something in here just to talk about this, but we're looking at maybe a little 1, 2, 3, and this is where this pattern ends up, and that would put us back at 20 basis points over. And I believe, the fears of the inverted yield curve, notice you haven't heard anything about that for a while. That's not going to be a thing here as we go forward, I guess, for the foreseeable future right now, unless something happens. I mentioned this before. If we did get a big surge up to, above 3% on the 10-year, this is what you want to watch. You want to see if it flattens during that surge. That's not going to be a good sign. If we continue to be somewhat stable, at least positive on the yield curve, this is the 530 spread that we're looking at. And when you're looking at that, that should be enough. If I bring this out while I'm talking here, I'll put it on the screen. You'll see on a weekly basis, this thing has been complete. I mean, it's just fallen off a cliff. And I started talking seriously about this back in July and August of 21, that this thing collapsed here. It was going to get really ugly. So basically, this spread was telling us about what was going to happen in yields. And same thing here again. I think if we do get another low, we do invert again, then that could become an issue. As I've said before, the inversion itself doesn't signal anything. We need to remain inverted for a number of months, not maybe at least 6 weeks or more. It's not, okay, well, we inverted, so that's a signal for a recession. And I think it's kind of funny. I think I saw Morgan or somebody come out with a report, or Goldman, and it's like they have a 35% probability of a recession. I mean, why bother saying it, right? I guess it makes a headline because that's what it was. Is that, Goldman says 35% chance of recession next year. I mean, who cares, right? That's from the standpoint of what's going on here. I think we're going to get some messaging. There's some things just to tie everything together. What I've been talking about so far tonight is that we're probably looking at the yield curve numbers, the actual yield on the 10, and then going to the yen, looking for what kind of things come out of that. And I didn't cover the Dow, but the Dow traded up to almost 104. And I know a bunch of folks on the channel a number of months ago, I said we could look at 102, 104. It seemed completely ridiculous on the Dow index, but here we are. And, you know, it's probably not done yet. And so that's why the yen's not done. There's going to be some real challenges. And I think we're just going to call it the next 10 days or so are going to be quite reviewing. You know, we have a Fed meeting coming not too far too. So we got plenty of things that we're going to have to work with as we go forward. So while we're on the weekly chart, this is the crude oil, and I have been continuing to talk about a 96 to 106 range. We're back to 105. We were up at 105.50. This is the weekly right now. Let me bring this over on the screen so you can see this. The 10-period moving average, 103.64. We're trading 104.81 right now. I mentioned that rising pattern through this market grid is a bullish pattern, and that the market's going to want to stay above that level. And we did see a nice run on like XLE, the energy ETF. We did see, you know, all the energy indexes and sectors, everything did pretty good yesterday. But we're continuing to remain around this level, and I don't see this changing. In fact, we're seeing the PPMs right now are accelerating just a little bit from the standpoint. We're at 1.62. This is weekly. 2.32 on PPM2 and 1.25. So that angle of attack is big. These things don't change very quickly, and certainly will remain in this uptrend for a while. Will we print above 130? I don't know. I think that was a spike high. From that standpoint, that was really out of control when we printed up there. But the pattern is setting up is potentially bullish, that will challenge that 130 level, and maybe there's more in there, but for sure it's going to stay at least in that sideways range, 96, 106, maybe print as high as 109, something like that. So I'm looking forward to this. I want to bring up since we're kind of focused in on the end of the month, this monthly got one of these giant box formations that I call them on the market grid. And we are trading right now on the market grid from the standpoint of monthly. The high was 109 this month, and we're looking at right now at 104. R1 is 105. 111 was R2. So we didn't quite make R2 this month, but I suspect that we could see some narrowing, but this is a thing that's about to happen here on this chart. So this is a monthly crude, and that rising 10-period moving average into the market grid on one of these expanded volatility is very, very bullish. And that means that probably for the next 2 or 3 months that we're going to continue to see at least a consolidation up here. I'm sticking with 106, 96, possibility of printing a little higher in here, but it's going to be interesting to see how the market grid comes into play. We may see it actually slope up and turn up a little bit. The volatility overall for the last 3 months have increased, so we're probably going to see this expansion stay like it looks like right now. Just going to go to a short term, finish on the daily. Daily charts we had that cycle low come back in here on actually the day of the low. 95.28 was a cycle low that came in, and so that was reasonably substantial. We've moved back up. PPMs are not getting a lot of traction here on the short term. So this is why I'm still stuck in this 106.96. I don't see the short term expansion to push prices up into these patterns, but stable will be most likely scenario. So here is the daily gold, and gold is turned negative, but we get a little bubble bottom. We're coming right back down to the 200-day moving average. That was it's at 1841. We printed down to, I think the low here was 1870. There was a number of support levels at 1880, so we printed through that. Now we're trying to trade back above the 1900 level, and we're 1902. We printed 1907 high, 93 low. So PPMs are trying to turn up, but they're still negative. PPM1 is at a minus 0.38, so that's substantial from the standpoint of the downtrend. So major resistance between 1915 and 1926 range. And if we can continue to stay in a sideways range for 2 or 3 days, that will burn off. Let's go ahead and look at the weekly. And the weekly 21 period moving average, 1881, that's the number I was talking about. We printed through it, 1870. We're back up and over 1900. PPMs are, this is a terrible looking chart. I'm not super thrilled about this, but that 21 still has a decent upward slope, which is at 0.28. That tells us there's some decent support here. So the range is probably going to be 1880, 1940, maybe 1935, 1940 on the upside as we come into the next week. That would be my expectations. Final market I'll cover tonight is Bitcoin. Bitcoin continues to just stay in a sideways range over the last few weeks. Last week, or 2 weeks ago, it closed at 39,380, 39,254, and right now we're at 39,674. So it looks like we're trying to stabilize here. PPM1 has actually turned positive. It's plus 0.9. PPM2, which is the 21 period moving average, is now 42,080. So that's going to be major resistance. Maybe we can trade into 41 handle. We'll take a look at the daily and see what's out there on that. Let's go there now. So the low print the other day was 38,316. We didn't even hit, let me make sure I get the right number here. Yeah, we didn't even hit the into the S sequence, so to support 37,813. So we traded just above S1. The high has been 39.6, which is just above R2, and you can see the resistance of R3, 40.74, 40,607. So that's where the numbers. Let me get the right numbers. That's wrong day. Apologize. The number is here for 45.10, 41.120. So that puts us up. 41.666 is the RXT, and this is going to update. And like I said, we've got PPMs on a daily basis trying to turn up. It will take 2 more sessions, and that will carry us into probably Sunday night. That we'll have a potential for PPM2 to actually turn up. Okay, folks, that's going to do it. Just a quick, something I should have done, I realized on the, I should have done this at the beginning, was I'm not sure there's going to be a broadcast on Sunday night. I've got a conflict that's that has to be dealt with. I may be able to make it in time. So I will put a comment in the channel if that's not going to happen. So make sure you go to the comments on the channel to see if there's something on Sunday. Otherwise, there'll be a live session on Monday day, and then there will be a Monday night will be potentially the next video here on YouTube. So I apologize for that. Last couple of weeks have been pretty disrupted here. And so that's going to be the best. But like I said, I'll make a comment. So go into the comments on the channel and there'll be an announcement there. So if there's not a video, that'll be it. So we'll probably send out emails to any of you that have signed up. So if you haven't signed up to, just so we can contact you, that's kindlereport.com, and there's a form you fill out there, and that's that. If you want the indicators, that's here, right? kindlereport.com/indicators, and that will get you to indicators. So at least you have most analysis, and you also get a full month to the live room. So anyway, thanks again. This will do it for the week. Everybody have a great weekend. Good trading tomorrow. Watch out for all the crazy volatility, and we will see you probably for sure Monday night, possibly Sunday. It just depends on how things come down. I think it's looking a little like it's not going to happen on Sunday. But so let's count on Monday night. And if there's a Sunday or not a Sunday, I'll put a comment on the channel. So thanks again. Have a great weekend and good trading, everyone. See you later.